From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hello. Welcome to the COB. Great to have you with us. 7th of August, moving right along here.
Yeah, absolutely. But also, I mean, I know we're going to jinx ourselves, but reporting season needs to ramp up a little bit, doesn't it?
I know. It is always a slow burn at the beginning. Then you're in the thick of it, and then you miss it when it's gone.
Yeah, well. Anyway, today we saw the market have quite a bit of a recovery.
Yeah.
It was sort of down on the open, then a little bit of buying, particularly around lunchtime. If we have a look at the chart of where the market went or not, I can tell you by looking at where the ASX 200 is tracking, and it's higher by about 0.4%, 7,710.
Yeah, and if I look across my screens, as I was wont to do the past hour or so, all Asian markets are in positive territory. We've got US E-minis in positive territory. We've got Brent crude pushing higher in this Asian session. So yeah, don't fool yourself though. There is still a lot of caution out there, I think, and also the prospect for volatility. I mean, just taking something coming from Europe, we have Novo Nordisk missing its profit forecast today. So talking about increased competition in those GLP-1 weight loss drugs coming from Eli Lilly. So we'll see how the market reacts to that. So don't think that we're over it yet, but we'll get some analysis with our expert guest soon.
Yeah, and I think it was really interesting as well. Marcus Padley spoke to Andrew earlier today talking about the fact that he doesn't see what we've seen in terms of this volatility as necessarily a seismic move in the same way that you've seen what happened during COVID and the global financial crisis. But of course, it has very much hit sentiment, but we're seeing a rebound today. The Bank of Japan also calming nerves somewhat, which has sent the yen lower by about 2% against the dollar.
So we had the Bank of Japan deputy governor come out and saying that they're not looking to hike rates in the near term or short term, so the yen has slumped. Of course, you can get a lot of different analysis, a lot of different takes on the BOJ, and X is just on fire with this right now if you're interested. And we did have a jobs report from New Zealand, really weak. And I just remember, the people that I've been speaking with from New Zealand lately, they've just said, look, it's pretty dire there. Like really, it's real economic slowdown.
Yep. Okay. So I think Capital Economics was among those saying that potentially there'll be a cut next week. When it comes to our markets, though, the rebound, let's kick it off with some of the big movers, particularly in the energy space. Woodside there was higher again today, up by 1.3%. I don't think that's a really strong reflection of the overall sectoral moves in the energy space, because I think that overall sector was one of the front runners, up by something like 2%.
Yeah, well, it was, but I do note even just in the past hour, Juliet, like Santos was in positive territory when I got on air at 3 p.m. here in Sydney, and obviously we're time stamping this for all of our lovelies that listen to the podcast form. So Strike Energy looks like it'll be closing down as well by about 4%, but it did have some results coming through from a drilling project. All
right, let's have a quick look at the miners. They certainly started to power ahead around midday, but as you say as well, a little bit of weakness going into the close. Fortescue off by 0.5%. South 32 and Mineral Resources ending higher. The gold stocks, were also looking quite good. Newmont up by about 1/3% today.
Northern Star, that was entered into the fantasy portfolio, the ausbiz fantasy portfolio from the investment committee, of which our upcoming guest was a guest, so to speak. So look, you can listen to that new episode. It's up online under series on the website, ausbiz.com.au.
And a quick look at the banks as well to round out the overall picture. We have seen CBA come off, but ANZ looking pretty strong, up by around 1%.
Look, to your point, Juliet, there weren't tons of big name companies reporting today, but Arcadium Lithium had a great day after reporting on its second quarter, of course, saying that it is managing operations to navigate any type of environment. We've got to think that they're talking price.
Woodside, of course, had that big fall yesterday, but a rebound today. So investors struggling, I guess, to look at some of these returns on their large acquisition of that mine in... Where was that again?
It's the
Gulf,
US Gulf
Coast.
Coast offshore. And then yesterday they said that they were going to take on an ammonium plant. So it's just, how much are they spending and how much will they be able to return to shareholders in the future? Westgold Resources has begun trading on the TSX, the Canadian Stock Exchange, And Fisher and Paykel.
Yeah, one of the best performers today. All right, let's get straight into our guest to make sense of it all. Mark Gardner from MPC Markets joins us. Mark, you joined me yesterday when there was a lot of volatility. Volatility remains, but a bit more calm coming through.
A lot more calm, really, compared to 10 o'clock yesterday morning.
Yeah.
Yeah, obviously, we're pretty lucky to have stabilised. I think a knock-on effect to the US. It was on the open on Monday night, was around about $1 trillion in the Mag 7 alone, being knocked off the market. Obviously, they've stabilised, been led a little bit higher by Nvidia, but Nvidia's obviously had a couple of company-specific announcements, two delays, I think, particularly to some chips, a design flaw and one of their others. So their earnings are still 3 weeks away yet, and then I think they're the last of the Mag 7 to report. So, but really, it's good, very good that it's stabilised. Obviously, it was a wild move, and I agree. I don't think it was it was more a markets problem rather than an economic problem. Obviously, that move in the yen and the yen carry and things, I think, is that's obviously pretty important. That move over lunchtime in the ASX market corresponded very closely to that yen move. So probably at the moment, that's if you want, for all the viewers and things out there, having a dollar yen or a yen Aussie chart is probably not a bad way to to see if something's going to flare up again, because that seems to be a bit of a catalyst.
Okay, so you sound calmer about this bout that we've seen, but safe to say you're still cautious heading into reporting season?
Absolutely, yeah. Look, we bought ResMed into earnings. We've had it on for 7 days, but we took it off today because 10% win, going back to cash. I think it's there's scary moves like that. If it usually isn't in isolation. I'm not saying it's something that's going to happen tomorrow necessarily, but it really did bring to the fore the recession fears for the US. So we got inflation numbers next week as well. So and I just think that it could very well go again, and the technicals have now turned quite soft as well. So take the opportunity to probably do a bit of a reset in the portfolio and have some cash, and then earnings season's obviously coming up. Eli Lilly, it was another catalyst as well. It reports earnings tomorrow night, and ResMed doesn't seem to have a good night usually when Eli Lilly reports.
Yeah, right.
It was we were a little bit fearful of that as well.
It had a great day on Monday, though. I think it was the only stock that was up on our market.
That was very pleasing, I've got to say.
So next week, we're looking to some of the big guns. We've got CSL, CBA. We're going to be speaking to Matt Common. Your thoughts on how we play all this?
I still think the big four is pretty overvalued. I think that sort of that yen carry trade, a lot of that money tends to sit in those big four banks. So I think that move back down from 137 to I think 124. It's bounced a little bit now, but I don't really see where they're going to have a better result than last earnings, and we're significantly higher. So I think the financials will probably be a little bit softer, and we might see the commodities start to head back up because there's a lot of panic there. So JB Hi-Fi, I think, is the start of the week. The retailers will be, if they report well, given what's probably looming in the next 6 months, I think you probably take your opportunity to take profits. That sector's done extraordinarily well in the last 6 months. You're likely to get a bit of a tailwind, but I dare say the outlooks, and just ask Audinate, outlooks are pretty important. So I would be, I'd be in the high quality retailers. I'd be taking the opportunity to probably sell into strength there, because we are, we're usually around about 6 months behind, 9 months behind the US, and if they're looking at coming into recession. Our earnings seasons are 6 months apart. It's a long, long time for us for you to be sitting in those stocks.
So what's your general time frame when you're talking to us, Mark? I think it would be instructive for our viewers, because I had a conversation with a couple of guests yesterday that were saying if you see a wobble in JB Hi-Fi in reporting season, it's a buying opportunity, but they're very long-term investors. But it sounds, even just taking your ResMed tidbit, that you can be quite active.
The ResMed, we're very happy to own that long term. But there's obviously things like CSL, for instance. We've traded that range for 3 years and made 55% in that position instead of probably being up 3 or 4%. So we're active managers within core stocks. So we will, we do have a lot of data behind what the average range will be for most of these stocks in a year. And if it gets there, if it gets there quickly, I mean, statistically, it's just extra risk. There's other things to buy. We're never necessarily short on ideas, so there's always something else that's a good opportunity. So I think the coal stocks will do quite well. Particularly the strength in the yen. Japan buys a lot of coal. Stanmore and Whitehaven and those guys they're significantly off their highs. Stanmore's next Tuesday. Whitehaven's the following week. I think.
Coronado wasn't crash hot yesterday because of price.
I don't think they're in the same league necessarily as, but yeah, Coronado's we've got at fair value at the moment. Stanmore was recently at $4, back at $3.35. Whitehaven was at $9, it's back at $7.50. There's some big divvies there as well. So yeah, Yancoal's very overvalued at the moment. That's one of the most expensive, but people tend to try and buy that into earnings because they usually pay really high dividends. But there'll be some opportunities, but definitely, yeah. You're looking for the outlooks more than the rearview mirror.
What's the biggest macro risk in the short term or on your radar, I guess? We've got inflation next week out of the US. We had the RBA governor yesterday very much indicating cuts are not on the table. And you've also, as you mentioned, got the unwind of the carry trade. Yeah,
I think it's US, it's leading indicators in the US now. I think inflation will be far less importance moving forward because everyone's working under the assumption that it's under control, unless it's significantly higher. But I think those jobs data, like leading indicators, manufacturing data, and things like that, will start to. And they've been really poor for a long time. ISM manufacturing's had its worst streak even since 2000. So didn't even have this bad of a streak during the GFC. So. But the Mag 7 has just stolen the headlines, so you haven't really noticed it because the concentrations just push the market higher. So I think 40% of the S&P is down for the year. It just gets hidden in the background. So any further signs of economic weakness in the US, I think that really starts to drive the market lower, and then when the rate cuts come. I think the buying opportunity is probably Q4 this year or maybe early next year.
And we've maybe seen the peak of the dollar against the yen.
I think so, for sure. Yeah. Absolutely.
Just a quick one, because you did name drop Audinate. I mean, that's been a really severe reaction.
Yeah.
Now, and some say justified. I think it's our stock of the day. We'll get there in a moment.
Oh, no, Henry Jennings really enjoyed that one because I was partly responsible for that one going in the portfolio. You can comment on Audinate specifically, but I think what I was getting at is, is that the type of reaction we could see with some of these companies that disappoint on the outlook? Because I think yesterday was down like 20%.
And you also made a really good point yesterday when we were on air about why did they do that? Why
well,
did
it
they
was
come
their earnings aren't till the 19th. They didn't need to do it, and they literally did it on the third worst day in history, being when the volatility was its third. And it's a thin stock as it is. It was really, really silly to do that.
But don't they have to if they know that there is a significant change to their expectations? I can't talk.
But there wasn't, though. They were largely decent results. It was the outlook that really, and they can release that. It's up to them to when they release it. But yeah, obviously having the most volatile session and one of the biggest drops we've seen in half a decade. It was a bad time to release it, but I mean, look, they're in AV technology; they're not in markets, so I guess you probably give them a pass there.
That's why you hire an investor relations person.
Well,
possibly
go listen to Mark and my chat yesterday for some savvy words that Mark said about whoever's running their investor relations team.
Just give us a call.
But we're friends. We're going to be speaking with them in the wake of the report.
I know we're a holder, and we're adding. We're being patient at the moment because the market reaction's really extended, but we will add to it. Long-term growth prospects for that company are incredible. It was just disappointing because Henry Jennings is going to give us absolute crap at the next investment committee. I think he sent me an email within 1 minute of the open.
I don't think you've got an invite yet. So.
I may not be invited back. And then but also we're holders already. Yeah. We expected decent earnings. So.
Okay. Look, Mark, nice to have you here with us as always. Good luck out there. We'll see you soon. Mark Gardner there from MPC Markets.
And then go into our stock of the day that we've just been talking about, Audinate, Henry Jennings, of course, from Marcus Today, and Andrew Weiland from DP Wealth Advisory.
I guess the writing was on the wall. We've seen the CFO leave, but it wasn't so much the results that really spooked the market. It was more the outlook, and I guess it was also the fact that maybe the recurring revenue nature of this business isn't quite so recurring. Now, it has dropped from $14 back down to sort of $8.40, which is a big drop, and there will be at some stage some value emerge, but the problem is that it takes some time to win back the trust of the market. We are seeing downgrades. I know Shaw have got a piece out this morning.
Short interest has been rising significantly since February. So, when you look at that, people betting that the share price was going to come off, a lofty PE, the non-recurring nature of the revenue, the trust us, it'll get better in the second half piece. There's certainly plenty of amber flashing lights, so it ain't a buy and it's a tenuous hold.
Let's have a look at the leaders on a day where we did see a nice recovery on the market. Arcadium Lithium we touched on with its numbers beating the street, up 7%. Pilbara Minerals also had a good day along with IGO. And Fisher & Paykel we touched on, one of the best performers today.
Yeah, it did have a broker, Wilson's, lifting its price target, but maybe just riding the coattails a little bit perhaps of ResMed. Flip side is Strike Energy off by 4%. And that's after some drilling results coming through. So clearly something not to like in there. Tabcorp, Block, Audinate, there you go. It's down by 2.8%, so adding to some steep losses yesterday. And we saw its price target cut close to 50%, just for example, by Shaw & Partners, 55% by Morgan Stanley.
Wow. All right, to the small end of town and having a look at some of the best performers today. Centaurus Metals up 19%, so a lot of resources theme there. Hot Chili as well had a good day. And Appen up by almost 10%.
Yeah, that's made up all of the ground I think it lost in that bout of volatility now. Flip side, though, what did we see coming under pressure? High Pages off by 6% and FBR, Fast Bricks. That's often on these two pages, whether it be pushing higher or lower on the day.
Yeah, let's have a look at what's happening tonight in the global session. We've got consumer credit, some really big earnings as well. You mentioned Novo Nordisk, also Disney, CVS Health, Lyft, so that's the Uber equivalent, Occidental Petroleum, Robinhood, which of course made its name during the pandemic with the meme trading frenzy, and Shopify also coming out with numbers.
Yeah, on the U.S. consumer credit for June, Westpac is pointing out that it should highlight rates and labor market uncertainty as headwinds. So interesting to see how we digest that. I do not see any Fed speakers on the roster. So we'll just have to wait to get more from the FOMC.
Do you know who we hear from tomorrow, though? My new, or I wish, best friend, RBA Governor Michelle Bullock giving a speech in Armidale in the northern New South Wales Tablelands. We've also got half-year results from AMP and Light and Wonder coming through overnight. So we'll have that in the morning.
Yeah, Mirvac, Transurban, those are big results that should be listed with AMP. So keep those front of mind. No doubt they'll be dropping to the market around 8:30 a.m. while Light and Wonder comes out, I think, after the market closed today, so we'll be keeping a very close eye on that. In fact, maybe I'll have a little look-see now, Jules, while you go through.
Well, while I do the market.
Yeah.
So let's have a look at where we finished on the CBO 200 and, of course, give you a read on the ASX 200 as well, which is up 0.4%, 7,709 on the close. CBO 200 rising by 1/3%, so you can really just see that turnaround came through around 11 a.m. and then pushing into lunchtime, we started to see a little bit more momentum and a lot of great conversations, Nadine, from our guest today. Loved that comment from Marcus Padley that, this is more of a correction, a pullback, not some kind of massive fundamental seismic event.
There's been lots of people we've been speaking with over the past couple of days who've said, put this in context, and that included Martin Crabb yesterday here on this program and podcast. We do have these bouts of volatility oftentimes at this time of year as well. And pointing out that, who was I talking to today, saying, don't forget the Olympics are on, so there's not a lot of volume in Europe. It actually makes a difference also, summer season in North America. So yeah, calm has returned, at least for now. And just on the reporting season piece, Sony has posted a 10% profit rise in the first quarter, beating estimates. So not all is lost.
Yeah, and good it did that today and not Monday, I would assume, given Japan's movements. All right, we will see you from 9:45 Eastern tomorrow.